So that's a very interesting question, and Bank of Baroda has always been, one of the pioneers in taking such initiatives amongst the public sector banks. And I would say traditional banking, when you say it, is typically, India is getting collateral challenged. You understand it's a landlocked country. We don't annex any other country. That's not in our philosophy, and therefore, and due to the family division, etc., the land holding is actually shrinking. When the land holding shrinks, the properties also get divided due to the family feuds or separations. So we understand that, and therefore we believe that there is a challenge in collateral. Another company grows from small to medium, or micro small to medium. The requirement of a collateral, while it remains with the bank, but the collateral coverage goes down, because if you get additional exposure, the collateral will come down. We understood this problem, and therefore we made some departures from the traditional assessment. We moved to cash flow based lending, and certain products are there where we introduced product lines like, say, the commercial vehicle, the construction equipment business. We also got into a product like solar financing, rooftop solar panel financing. We got into healthcare equipment. These are all marquee, products which are, in the erstwhile scenario, were assessed as overall MSME. We have culled out and developed a product which is more schematic in nature, and it doesn't demand of any collateral, and our performance is actually superlative in those. So this is one departure we have made by delayering the whole processes and introducing new product lines. Okay, see, co-lending in its earlier avatar used to be named as co-origination. This was launched in 2019. And it didn't kick off well by then because there were operational challenges. While it looks very impressive, the philosophy behind the whole co-lending, which was a rechristened avatar of co-origination, is actually a brilliant thought. The thought why co-lending is critical for in today's industry, for the MSMEs particularly. While it is not restricted to MSMEs, it can happen in a retail loan, it can happen in an agriculture loan also. It's typically the NBFCs it's not that NBFCs has got a better reach than us. Obviously, a Bank of Baroda has more than 8,000 branches. So our reach is obviously superior to any NBFC. But what happens is the NBFCs, they have got their USP in form of certain core competence in certain product lines. And when they say reach, it is the point of sale. Today, the point of sale is not the bank or an NBFC. You have to reach out to the customer. I think the NBFCs have got a brilliant, footprint in terms of reaching out to the customer. Right, the last mile. So that last mile reach is terrific. And two, they specialize in few product lines, which in a bank of our, caliber or stature, we would treat it as a normal funding. So with their help, we get introduced to new product lines and we address the target market. So I think that is a brilliant combination. There are operational issues, there are challenges, because we don't believe at Bank of Baroda we want to do this co-lending only digital way, not in a manual way. So we could have scaled up this business under the manual, but we always wanted to do it digital. So I think our platform is now ready. We have got an indigenous platform which we have developed, and there's a digital lending department which has done that. In collaboration with that, now we can onboard as many NBFCs. We've already onboarded 4 of them. We are in the spree of onboarding a few of them, but there are the operational challenges. There are accounting logics which are different in 2 different entities. So both of us travel together, but we are encouraging more of there are 2 options. One is the normal, which is a DA route, which is direct assignment type of mechanism which we do, wherein you just buy the portfolio and lend that. And one is you simultaneously lend. So we are doing both the things simultaneously with different partners, depending on what is the choice. See, we are a government-sponsored bank, right? We are a state-run bank, and therefore it is very important that being the custodian of public deposits, our lending has both the angles. One is, of course, which is P&L focused, and the other part is that there is a lot of societal obligation which we carry. Since it's the public money, all the welfare schemes which are being launched by the government, we wholeheartedly support them. See, the government-sponsored schemes are essentially aimed at certain strata of the people. So the various schemes are, say, it's for women, it's for the SC/ST class. Sometimes it is for street vendors. So they are aimed at a particular set of people, and a lot of thought goes behind that, a lot of statistics and research goes behind before coming out with such things. And it is an onerous responsibility on public sector banks like ours to kind of implement them in the right spirit. We have been very active in this. We have a full-fledged department which handles the government business. There is a DGM who heads that in MSME. Apart from in agriculture, we have a separate team. We see that, and in various discussions with the reviews with the Department of Financial Services, we are actually being weighed out on each and every parameter. So government has designed parameters on which there is a ease 4.0 when we were declared the best bank. Now Bank of Baroda stood number 1. Or it is on a particular scheme, there is a review rhythm which the government maintains, and we see that the beneficiaries, they get a speedy redressal of all their problems. We ensure that the last mile gets the benefit out of every scheme which the government floats. There are some schemes which do not take off the manner in which they should have. So we go back to the government and say that these are the improvisations which are required, and therefore they do some amendment and it is relaunched. So I think during the COVID, just to quote the example, we practically stopped our business in the other because there was no fresh credit offtake. The entire business pushed into the ECLGS, the emergency credit line scheme, and we disbursed huge amount of money. It wasn't actually an opt-out. So we were mandatorily given anyone who is asking for ECLGS, if he's qualifying, there was a straight-through process. We said that yes, loan will be given. So we disbursed huge amount of money in the ECLGS scheme, and it saved so many MSMEs today. So I think these are brilliant schemes, and the government has been very successfully, launching them from time to time. I think there is more awareness required. That awareness spread is very much critical to make any scheme implementable and successful.